Okay, good morning. Welcome to Chaikin PowerFeed, your daily market digest for Thursday, May 31st, 2018. I am your host, Dan Russo, the chief market strategist at Chaikin Analytics. You can find me on Twitter at DanRusso_CMT. Every day, PowerFeed TV is brought to you by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. You can get your free daily Chaikin PowerFeed at www.chaikinanalytics.com/PowerFeed TV. So jumping right in, U.S. equities were higher in Wednesday's trading, breaking a three-day losing streak for both the Dow and the S&P 500. Energy was the leader as oil rebounded, while financials also recouped some of their previous day's losses. Technology was the biggest laggard, though all sectors did finish higher on the day. Treasuries sold off across the curve, which did help the financials. The dollar was weaker on the euro cross, but slightly higher against the yen. Gold finished up 20 basis points, and WTI, as I said, crude oil settled up 2.5% after 5 consecutive declines. Some speculation that OPEC and non-OPEC allies could increase output soon. Breadth on the New York Stock Exchange was positive 4.3 to 1. That's a big number. And breadth on the NASDAQ was positive 2.3 to 1. So let's kind of dive in now. Look at the key levels that we're watching. And the S&P 500 continues to consolidate in the context of a secular uptrend. That's our view. Support is at 2710, which was prior resistance, and then in the 2658 to 2675 zone. You can see I kind of color-coded the lines here today. And then 2636 is the 200-day moving average. Resistance comes into play at 2741. That's the key level we're watching. That's the level we want to see broken to the upside to give us conviction that the secular uptrend is resuming. And then I didn't put it on the chart here, but you can 2800 is likely round number resistance. It's also the early to mid-March highs. So that's kind of where we stand, still within the consolidation. However, there are some bullish developments under the hood that we want to keep an eye on. First is the RSI is in the process of shifting to bullish ranges. This is the momentum indicator that I like to use. And we can see here that recent lows have been above the kind of 40 to 50 level. Should the indicator shift, that could be an early warning that we are, in fact, going to resume to the upside. And another early warning, I've highlighted this for a few days now, is the Chaikin money flow indicator is solidly positive. You can see here we're up near 3-month highs. So consolidating within the context of a secular uptrend, in my view, odds favor a resumption of that secular uptrend once we get through to 2741 level. So your market in a minute, delivered to your inbox every day as a PowerFeed subscriber. Stocks rebound as political tensions in Europe ease. Oil, as I said, broke a 5-day losing streak, up strong yesterday, up to over 2%. Transportation, is it emerging as leadership? We'll take a look and find out. Some of the breadth measures that I track are still constructive. I've done a deep dive on breadth here last week. Really not much has changed. The advanced decline line still near all-time highs. That is constructive, and futures are pointing to a flat open today. So kind of after the rebound yesterday, the power bars, not much of a change here in terms of what we're seeing. The Dow still skewed to the negative side, 9 bearish or very bearish stocks for 4 bullish or very bullish stocks. Slight uptick for the S&P 500 from yesterday, 66 bullish or very bullish stocks, 100 bearish or very bearish stocks. NASDAQ really been flipping back and forth between the even line here. It really is a tug of war between the bulls and the bears. Currently 15 bullish or very bullish stocks for 13 bearish or very bearish stocks. Look at it once again, small caps outperform. I mean, I'm close to jumping up on the desk here in terms of my conviction in this trade. Small cap outperformance relative to large is a theme I think continues. You can see it here in the power bars. 555 bullish or very bullish stocks for 283 bearish or very bearish stocks. As we said, bonds downticked yesterday, sending the yield back above 2.85%. It is higher again this morning, up over 2.87%. And energy was the big leader yesterday as oil advanced over 2%. The energy group was up over 3% from a stock perspective. So according to the Chaikin power bars, small cap stocks are more bullish than large cap stocks, and the major indexes are mixed. Here's your mixed picture. Consolidation in a secular uptrend. Moving on now to the stock of the day, and this is timely that the stock of the day is a transportation stock. We're going to delve a little deeper into transports later in the show. But taking a look at Genesee Wyoming. Again, this would be delivered to your inbox every day as a PowerFeed subscriber. Genesee, Wyoming, coming to us from the transportation group, closed at 79.61, up 2.33% yesterday. Look at that outperformance. GWR has a very bullish Chaikin power gauge rating due to very strong price and volume activity, attractive financial metrics, and positive expert activity. So let's take a look at the chart here, see what's going on. We read our charts from the bottom up. You can see the ribbon here at the bottom tells us where this power gauge is currently and where it's been over the past 12 months. And you can see it's new strength, which is really interesting. It's a very bullish power gauge rating, has a strong trend in a strong industry, and it's beginning now, really since kind of the beginning of May, to outperform relative to the SPY. So the market beginning to agree with the model as relative outperformance is one of the keys that we look at. We want to see these two metrics in gear. That lets us know we're in the right area in terms of looking for long ideas. Next, we want to kind of figure out if tactically it makes sense to get involved. And I would say it does. Our overbought, oversold indicator is closer to oversold conditions than it is to overbought down here near the 30 level. And that coincides with some stronger readings of late from Chaikin money flow. You can see like through most of this year, the bullish readings have just kind of been blips, right? Whereas the bearish readings have been more intense. And now we're starting to see a flip of that where the bullish readings are more intense. Not like what we saw at the end of last year, but I mean, the market was super strong then. But we'll look for this to continue to improve. Stock is above the rising long-term trend line. That is constructive, kind of closer to the high end of the volatility band. So we'll keep an eye on that. But, this stock looks compelling to me as a long idea. GWR in the transportation group setup looks compelling as a long idea. It is your stock of the day as a PowerFeed subscriber. Moving now to the sector tracker. Let's look at some of how the sectors have been moving over the past 5 days. And listen, there's definitely been, despite the rally yesterday, there's definitely been a bit of a risk-off tone to the market, some short covering as well. And that's led to the outperformance of some of the defensive sectors here over the past 5 days, Utes, real estate, and staples. The decline in bond yields also helping these two groups. I think these moves are counter-trend. I think you want to utilize strength in the real estate and consumer staples groups to isolate weak names and prune them from your portfolio, or if you do it, if you short stocks, kind of open some short positions. The flip side of that is financials. I think you want to use the weakness in financials to isolate strong names and add them to your portfolio or add to existing positions. I am of the view that rates are going to continue higher. I think we're going to be back above 3% on the 10-year relatively soon with upside to 3.2%. That's been my stance for a while now, and I continue to stick with it. Technology, middle of the road. I've said this a few times. We want to see technology begin to outperform. It is market leadership as 26% of the S&P 500. We want to see tech doing well, and in particular, we want to see semiconductors doing well. Semis are starting to perform better at the industry level. That should pull technology higher, but we'll keep an eye out on that. Our industry in focus today, this is interesting. Home builder services. I actually have a somewhat bearish view on home builder services, and it looks like the Chaikin Power Bar is beginning to agree with me. 8 bearish or very bearish stocks for 7 bullish or very bullish stocks. Over the past 6 months, the builders subsector has underperformed the S&P by 10.37%. That's a huge underperformance. Its power bar ratio, which measures future potential, is weak with more bearish than bullish stocks, and it's currently ranked number 16 out of 21 subsectors. It did move up one slot over the past week, but I think this is all a derivative off those higher rates. As rates go higher, mortgage rates go higher, home builders are impacted. And I think, a derivative call off of higher rates is weakness in home builders. And within that, look at some of the indicative stocks. It's not just, the Lennars and the DHIs and the Pulte's of the world. I mean, these are companies that supply the builders, right? Tempur-Pedic is a mattress company. Really drilling down, this is what we do. We kind of look for the derivative plays off of theme. So a bearish theme for builders does not just impact the builders themselves. There are derivatives off of that. We'll take a look at that here today. Leggett & Platt, Tempur Sealy, and Installed Build, all with very bearish Chaikin power gauge ratings. Let's dig in on one here a little bit. Installed Build, it's a buildings products company. It has a very bearish Chaikin power gauge rating. Closed down yesterday in a strong tape, down 57 basis points. The trend is weak. The industry is relatively strong, but as I said, I think we're early stage of weakness for these groups. So reading the chart from the bottom up, we can see IBP, regardless of the strength in the industry, it's just not been a name you want to be involved in. It's been neutral or bearish for most of the past 12 months. It's currently on a very bearish power gauge rating. So, we know we don't want to own this stock at the very least, and potentially might want to look at shorting it, as the dynamic duo is also in here. It's underperforming relative to the SPY. So the market is in agreement with our model. This is a name at the very least we know we don't want to own. We might want to consider shorting if the tactical setup is there, and I would say it is. Look at the overbought, oversold indicator here. We're closer to overbought conditions here near 70. And money flow, while positive, I would argue that this is, as the stock has worked higher, it's seen less intense positive readings and more intense negative readings. So, I wouldn't read too much into this here. I would like to see it negative, but I would say, look at how intense the negative readings have been relative to the positive readings. That is a sign, bigger picture of distribution by institutional investors. We can see the stock is below the falling long-term trend line, closer to the, and it's also above our 21-day moving average in the top half of the volatility channel. This is an interesting name to me. If you own it, you probably want to take it out of your portfolio. If you, look to play names for short exposure, this is a compelling setup here and now. Ticker symbol IBP, installed, build, very bearish Chaikin power gauge rating. Some trending stocks yesterday as gainers and losers. Monster MNST in the software space, it's a neutrally rated stock. They were up on earnings. NFX, a positive stock, up over 5%. APC, APA, and CME all seeing some strength. CME is a financial stock, is currently on a neutral rating. We'll look for that to see if that improves as financials start to improve as well, because I think rates are going higher. Here's what's interesting. Look at here are two builders, underperforming yesterday, and kind of on the top 5 losers list. DHI down 1.5%, Lennar down 1.5%. So you can see that theme beginning to play out. CBOE kind of taking the opposite stance of CME here. Not quite sure what drove that lower, but Michael Kors was down close to 12% on earnings. And in fairness, I actually had this one as a bullish idea back in March. Stock was doing well, but obviously a bit of a hit yesterday. It would be nice if they were all winners, but that doesn't work out. That's why we manage risk and think about downside. Stock was down close to 12% yesterday. So moving now to kind of some of the themes that I'm seeing. Transportation could be emerging as leadership. The stock's breaking through. This is the IYR, the transportation ETF, breaking through resistance at the 195 level and above the rising 50 and 200-day moving averages. RSI in the process of shifting into bullish ranges, while the Chaikin money flow indicator has moved to a positive reading. So transport stocks kind of look interesting to me. We'll take a look at one here today, AAWW. But other bullish names with bullish power gauge ratings are HA, Hawaiian Air, ARCB, ArcBest, CVTI, and GNK. So those are names you might want to keep an eye on as potential long ideas, as transport seems to be emerging as market leadership. Here's Atlas Worldwide, looked at from the gauge of the Chaikin power gauge, a bullish power gauge rating, a strong trend. The industry is weak but improving. Here at the bottom of the screen, we can see the ribbon is on a very bullish reading, and look at this relative outperformance compared to the SPY. Market really in agreement with our model. Tactically, the setup looks good here above the 66 level as the stock is currently oversold. And look at the strength of Chaikin money flow. Stock is above a rising long-term trend line. AAWW looks compelling for an entry on the long side. So taking a look now at the sector level, really only 2 sectors have power bar ratios which are positive. It's healthcare and energy. Technology is balanced at 9 apiece. And financials, while better than the S&P, does have a bearish skew to the rating. So, if you're looking for long ideas, you kind of want to make sure you're outperforming the market. And these are the 4 groups that are outperforming the market. If you're looking for short ideas, consumer staples have seen a little bit of a counter trend rally, but not much, no uptick in the power gauge. Real estate continues to be weakness. I think that will be the case as rates move higher. Materials downticked, and discretionary kind of downticking as we go through earnings here. Amazon really the only strength in consumer discretionary. Some of the retailers have done well, but some of the retailers are also doing poorly. No clear theme emerging. So Every day you can get powerful, profitable stock ideas and more from Chaikin Analytics with PowerFeed, www.chaikinanalytics.com/PowerFeed TV. Thank you, stockcharts.com, for hosting. Have a great day, everybody.